This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do.
Needs a push. The trek toward Dow 20,000 stalls. And the question now, will the Santa Claus Rally ride to the rescue?
Feeling good. Rising stock and home prices have consumers feeling the best about the economy in more than a decade.
And New Year's picks, where our market monitor thinks you should put your money in 2017.
All that and more for Tuesday, December 27th.
Good evening, everyone. I'm Contessa Brewer in for Sue Herrera.
And I'm Tyler Matheson. Welcome, everybody. Well, 'twas the first market day after Christmas, and all over the street, many a trader was thinking or sending a tweet. If only we could hit 20,000, 2016 would be complete. But alas, it did not happen, and as the sunlight faded away, many an investor was looking for a Santa Claus rally to come in and save the day. All right, you get the idea, folks. Despite small gains, the Dow could not claw its way above the 20,000 mark, but the NASDAQ did hit an all-time high. Here's how the dust settled. The Dow climbed 11 points to 19,945. NASDAQ rose 24, and the S&P 500 added 5. Bob Pisani, he won't rhyme, but he'll take a look at today in the markets.
We got close, but not quite. The Dow finished today just about 50 points away from the 20,000 mark. Very light volume. We're entering the final stretch of trading in 2016. This is 10 trading days in a row where we've gone right up to the threshold, but we haven't walked through it. Traders have been anticipating the Dow would break 20,000 before the end of the year because of the momentum from the election, but mostly because the markets tend to rise in the last 2 weeks of the year. The Dow on average is up a little more than 1% in this period, typically, and that's more than enough to get us over Dow 20,000. But since the middle of the month, the momentum has essentially stopped. Market leaders like the banks and the industrials have stopped going up. And there really hasn't been any consistent leadership to take their place since then. So what's wrong? Well, really nothing's wrong. The markets have had a big move up. The S&P 500 is up more than 6% since the election, and it's perfectly natural for markets to pause and consolidate their gains after such a big move. The problem is the markets have paused with the Dow just shy of this big round number, and it's the last little bit of suspense for the year. One key point, don't expect big gains in your portfolio this quarter if you have a balanced weighting in stocks and bonds. So the S&P 500 is up a little less than 5% this quarter, but the overall bond market is down a little less than 5%. So if you have half your assets in stocks and half in bonds, you're basically flat for the quarter. Think about that. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And on that cheery note, and to help us think about what's next in the market, we welcome Gina Bolvin. She's president of Bolvin Wealth Management. She thinks stocks have run pretty far since the election and wouldn't be surprised if they take a break soon, which is basically, Gina, what Bob Pisani just said. We've come a long way since November 8th. A lot of momentum built in, a lot of anticipation about what a Trump administration could or might not mean for business. What do you think about the next few months?
Well, I think that most investors in the stock market should be long-term. We have seen the Dow risen almost about 9% since the election, and we really have to stop and think, how much gas do we have in the tank at this point?
So what are you thinking now, Gina? If we hit 20,000, that there might not be gas to go to 22,000 or 23,000?
Well, I think it's really important to take a look at where we are right now, and we've seen a tremendous run-up in the market. I think investors are betting a lot on a Trump administration, and it will be good for stocks. and I don't think there's a lot of room for error. We think 2017 may be similar to 2016, and there might be some volatility. We have interest rates rising, and we have elections overseas in Europe, and there could be some volatility along the way.
So let's talk about that point that Bob made or concluded with, and that is the idea that if you have a diversified portfolio, whether it's 50% stocks and 50% bonds or 60-40 as is a more classic mix, the bonds have not done very well this quarter. How should I feel about that? And should I make a move to lighten up on bonds and move more to stocks, or what?
Well, we would be very cautious to chase the run-up in the market, and it may be a good time to do the opposite of that and rebalance your portfolio and take some profits off your stock positions or your stock mutual funds and add a little bit of money into the bond market that has had a correction here.
So, Gina, since we're all on this watch for the Dow to hit 20,000, I mean, I don't know, personally, I'm planning a ticker tape parade. What does it really mean for the markets?
You know, I think it's a very short-term milestone, and it certainly is exciting, but I don't in any way think that it's very important or any type of indication of what's going to happen in 2017.
Give me a sector, Gina, quickly, that you think might outperform the overall market in 2017. Do you have one in mind?
Well, we do like technology. One of the reasons why we like technology is because over the past couple of years, the NASDAQ has not done as well as S&P and Dow-like stocks. And we like financial services. We think they'll do well under a Trump administration as there's less regulation. And the reason we like technology is because financial services spend a lot of money on technology.
Gina, thanks very much. Gina Bolvin, Happy New Year. Gina Bolvin is with
Thank you.
Bolvin.
Happy New Year to you.
You bet.
Thanks for having me.
You bet.
Home prices hit a new high in October, according to a widely watched market index. The S&P Case-Shiller National Home Price Index rose more than 5.5% from the previous year, its biggest gain since July 2014. But the strong pace of increases raised concerns over affordability and sustainability.
And with home prices rising, Americans might be feeling a little wealthier. Consumer confidence surged in December, climbing to its highest level since 2001. The monthly survey by the Conference Board also showed Americans were upbeat, the most upbeat about the economy in 13 years. Also cited were a rise in post-election optimism over jobs and income prospects, as well as stocks at record levels.
Millions of gifts were opened this holiday weekend, and now it's time for the returns. The flood of returns has become a fast-growing business, fueling some of the biggest transportation deals of the past few years. But retailers are also hoping to use returns as a way to get more people back into the stores. Morgan Brennan takes a look at the rise of the returns.
The rise of online shopping has led to what shipping firms now call the second part of peak season, the return season.
Most of our shopping this year was done online, but we came into New York today just to walk around a little bit and return some items, but also maybe buy some additional items.
I'm back here to return a coat that I bought last Friday, and I'm hoping to pick up another coat that he likes this time.
Retailers and shippers have their work cut out for them. Unwanted gifts can make up as much as a third of online sales, and companies must find ways to handle those shipments. The trend has made reverse logistics firms that collect, process, and often resell returns sought after. The reason FedEx bought Genco last year and UPS announced an investment in Optoro earlier this month. UPS alone expects to ship almost 6 million packages back to retailers next week. It's still a small fraction of the overall peak season volume, which hit record levels again this year, but a fraction that's growing at a double-digit rate compared to last year. But with just 4 full shopping days left in 2016 and consumer confidence at 15-year highs, retailers are also ramping up efforts to get people through their doors with after-Christmas sales, since consumers tend to spend more once they're there. MasterCard Spending Pulse says total holiday retail spending, excluding autos and gas, is up 4% versus last year, from November 1st to December 24th, the high end of many forecasts. Total holiday e-commerce spending surged about 19%.
The most important thing to appreciate is that everybody spent across the board. In other words, there wasn't one sector that of people that didn't spend. It really was everybody feeling confident and actually spending a bit more than they were spending last year.
But it's all about getting post-holiday shoppers into stores this week, and returns will be especially important. If retailers can get consumers to do that in person, it will drive foot traffic and set the stage for a more profitable exchange, and quite possibly more sales. For Nightly Business Report, I'm Morgan Brennan in New York City.
Coming up, why our next guest thinks betting on the consumer might be a win for you in 2017. Well, several of President-elect Trump's picks for cabinet posts may have some tough sledding through the confirmation process, and that has the potential to be a drag on any market momentum. John Harwood joins us now from Washington. John, welcome. If Republicans control the Senate and Democrats can't really filibuster cabinet nominees, what's the big hang-up?
Well, it's a good question, Tyler, because it used to be that you could, with 60, it would require 60 votes to stop another president from the other party from nominating someone. Now it only takes 51 votes to pass somebody, which with Vice President Pence to break the tie, Republicans could do it with 50. Now, the challenge is, though, that because Donald Trump is an unconventional candidate, because he's relatively unpopular, if Democrats hold together, they can only need to pick off a couple of Republicans, 3, in fact, to sink a cabinet nominee. And so the challenge for Democrats is going to be who is the weakest among the herd of nominees and try to pick off 1 or 2 and stop them with Republican moderate votes.
Well, we've already heard Senators Lindsey Graham and John McCain express concerns about some of Trump's nominees. Which of his cabinet nominees appear most vulnerable right now, John?
Contessa, I would say that, first of all, Rex Tillerson is going to face major scrutiny because of his status as the chief executive of ExxonMobil and his ties to Russia, which is a proxy for the larger issue of Donald Trump and Russia. Secondly, Steve Mnuchin, I think he will be confirmed in the end, but he's going to get a lot of tough questioning about the fact that he's a financial executive, former Goldman executive, at a time when Donald Trump ran saying he was going to stand up to Wall Street. And I think the most vulnerable of all the Republican nominees is Tom Price, the nominee for Health and Human Services Secretary. He has favored, along with Paul Ryan, the House Speaker, structural changes to Medicare that would be very controversial. Donald Trump said in the campaign he wasn't going to touch Medicare. If Tom Price is going to get grilled on what exactly his intentions are and the administration's intentions on that issue.
How much quickly, John, could these confirmation battles slow down the Trump agenda?
It's a distraction, potentially. It could slow down some things and gum up the works. However, because Donald Trump has got a cooperative Republican Congress, his efforts to, say, repeal Obamacare, cut taxes, all of those are going to proceed independently of the fate of any particular cabinet nominee.
All right, John, thank you very much. What an interesting month ahead it will be.
Well, Abbott Labs gets antitrust approval for its proposed takeover of St. Jude Medical. And that's where we begin tonight's market focus. The Federal Trade Commission said it cleared the $25 billion deal on the condition the combined company would sell 2 of its medical device businesses in an effort to ease competition concerns. Shares of Abbott Laboratories rose fractionally to $38.60, while shares of St. Jude Medical were up 32 cents to $80.15. The Food and Drug Administration has halted some studies of an experimental blood cancer treatment after the drug's developer, Seattle Genetics, said 4 patients died during trial testing. All 4 deaths were a result of liver damage, something Seattle Genetics is investigating to see if it was caused by the treatment. Shares plunged 15% to $52.36. Endologics, which makes medical technologies for aortic disorders, is placing a temporary hold on shipments of one of its devices as it investigates a manufacturing issue. The device was responsible for more than 60% of the company's approximate sales for this year. Now, shares were punished following the news, falling as much as 26% to $5.27.
Over the weekend, biotech companies Biogen and Ionis Pharmaceuticals said they received FDA approval for their spinal muscular atrophy drug. This marks the nation's first ever approved treatment for the rare and even fatal genetic disorder. Biogen shares rose 1% to $291.12. Shares of Ionis Pharmaceuticals were up more than 3%. They finished at $55.12. Amazon says it had its best holiday season yet. The e-commerce giant said it shipped more than 1 billion items worldwide in the holiday period. 900 million of them came to my house, with demand for the company's voice assistant Echo devices powering results. The company also noted that more people signed up for its Prime membership service than ever before. Shares rose 1% today. They finished at $771.40. A U.S. safety regulator has opened an investigation into the safety of the brakes in 2 Ford models. The National Highway Safety Administration said that the company's Fusion and Mercury Milan models, made between 2009 and 2011, have brakes that may fail in certain road conditions. So far, there have been 3 reported crashes associated with this issue. Ford shares were off a fraction. They finished at $12.39. And speaking of automakers, the automaker Tesla and the electronics company Panasonic will work together to develop cells for solar panels. Panasonic is expected to invest more than $250 million into a New York production facility that is owned by Tesla. Tesla shares rose nearly 3% to $219.53.
Rebuilding the nation's aging roads, bridges, and airports will likely be a major part of the new administration's job creation strategy. Since the election, not only have infrastructure stocks benefited, but also tech stocks related to things like building a smart power grid and intelligent water companies. Deirdre Boza explains why smart infrastructure could be an area to watch.
It's no secret that the big building and construction stocks have been rising on the back of Trump's promise to rebuild aging roads and bridges. But perhaps less known are infrastructure tech companies that make things like smart power grids and intelligent water systems. They also stand to benefit if we see a big building boom in the U.S. Now, these stocks make up an index of so-called smart grid companies tracked by Kensho, a tool that hedge funds use to analyze historical market data. The basket has risen about 9% since Trump won the election, beating the broader markets and the major SPDR technology ETF. Picking out some of the best performers, Daktronics builds electric signs for roadways and has surged more than 25% since the election. Mueller Water Products does advanced water meters and is worth about $2.2 billion in market cap. It's climbed more than 20% since November 8th. Tesla is part of this index too. The thinking is that the electric car company, which is pushing into self-driving car technology, could benefit from smarter roads and infrastructure systems. Its shares have gained nearly 10%. Of the 24 stocks in Kensho's smart grid basket, only 4 have traded lower since the election, and all of those by less than 2%. So if you think that Trump will make rebuilding the nation's infrastructure a priority during his presidency, these could be interesting picks for your New Year's portfolio. On the other hand, if you think Trump may not follow through on his promise, they could be getting ready for a pullback. For Nightly Business Report, I'm Deirdre Boza, Vancouver, Canada.
All right, wondering what stock should be in your portfolio in the new year? Well, every night this week, we're going to feature a special market monitor to talk about stock picks for 2017. And we begin with Hank Smith, Chief Investment Officer at Haverford Trust. Hank, nice to have you back. I like your picks here. Let's begin with Anheuser-Busch. What's not to like there?
Well, look, it's a fabulous, high-quality company with great management. The stock, though, is down 25% over the past 2 months on some temporary headwinds, in our opinion. The stronger dollar hasn't helped. Brazil being in a recession hasn't helped. And then this Trump trade out of yield and consumer staples. But all these factors are temporary and, to us, create a great buying opportunity with Anheuser-Busch.
Okay, and then you are also liking right now Nike, but Nike's had a really difficult year. What do you like about it?
It sure has. It's the worst performing Dow stock this year. And, you know, they've had competition with Adidas And Under Armour, for sure, there have been some bankruptcies in some of the retailers that have affected them temporarily. But this is a really well-managed company with a huge spend in R&D and marketing. They outspend all of their competition. And so the valuation has come down to almost a market multiple, and we haven't seen that in several years, so we've taken advantage of that.
I was speaking earlier today, Hank, to a couple of retail analysts, and they, like you, love your third pick, and that's TJ Maxx. Why is it so hot?
Well, look, this is a retailer for all seasons. I say that figuratively and literally, fall, winter, spring, summer, but also for all parts of the business cycle, whether we're in an expansion or whether we're in a recession. Shoppers love TJ Maxx. They love the treasure hunt. It appeals to the DNA of all shoppers. And they have great product, and you really have to come there often.
And if you were just judging by the traffic, Hank, you walk into those stores, you see so much traffic compared to especially the big department stores, the malls for sure. And you know what I loved about it most? You go toy shopping in there, and those toys are at a discount, 50% off of what you could see them for on Amazon.
Yeah. My wife's favorite store, Hank, I think, is Home Goods.
That's part of the TJX family, right?
Yes. They're doing very well. And, you know, they're not being Amazoned as many retailers are.
All right, Hank, thanks very much. Appreciate it. Have a Happy New Year.
Yes, same to you.
May all your stock picks come true. Haverford Trust, we appreciate it.
Well, this was supposed to be the year virtual reality went mainstream, but it didn't happen. So will virtual reality ever get real? That's next. Well, Hollywood has lost another of its well-known faces. Actress Carrie Fisher, who's very famous for playing Princess Leia in the Star Wars films, died today. Fisher suffered a heart attack Friday on a flight from London to Los Angeles, and she's been in the hospital since. She was 60 years old.
Well, the latest film in the Star Wars saga that Fisher helped launch pulled in $96 million over the long holiday weekend, easily taking the top spot. Rogue One topped the animated musical Sing, and the two are part of another banner year for the North American box office, which broke the $11 billion mark and is now on pace to top last year's record of $11.1 billion.
Well, Snapchat has reportedly bought an Israeli maker of augmented reality software. The startup allows businesses or consumers to visualize what items might look like in a different environment. You say you want to see how that sofa looks in your living room. So far, Snapchat has yet to comment on that report.
2016 was expected to be the year that virtual reality broke into the mainstream, but it did not quite work out that way. And now, as Julia Borston tells us, the companies that invested heavily in the new technology are hoping for a turnaround in the year ahead.
We're here to make virtual reality the next major computing platform.
This year, Facebook's Oculus, HTC's Vive, and PlayStation VR launched a range of headsets, looking to bring VR to the mainstream. But now, SuperData Research has slashed its VR estimates from over $5 billion this year to just $2.7 billion, as headset makers struggle with supply constraints, the fact that not many people have computers required for high-end headsets like Facebook's Oculus Rift, and the challenge of convincing consumers it's worth investing in an entirely new device.
The real challenge was getting headsets into the hands of the consumers and giving them a chance to experience it, because it's almost impossible to understand what virtual reality is without actually being part of it and having that experience.
Sony's PlayStation VR was considered well-positioned because of the 50 million plus VR-compatible PlayStation consoles in homes. But SuperData cut its sales estimates for Sony's VR headsets this year from 2.3 million to less than 750,000, as Sony has taken a cautious approach to marketing and production. One reason Sony and others have moved slowly is that there hasn't been an explosion of content or must-have apps for these new devices to convince consumers it's worth investing in what feels like the very early days of a new industry.
They need to attract content providers and content creators, and they need to do that by showing them that the consumer is actually interested. But it's sort of a chicken and the egg situation because you need content to drive consumption, but you need consumers to drive content.
While a critical mass of consumer content builds up, there's been an explosion of business VR applications, from industrial manufacturing to architecture and design, sports training to medical simulations. And consumer VR should continue its rise next year, especially as it gets a boost from Google's Daydream. It costs just $80 but includes a controller, and Google's expected to make a big push for it as more Android phones that work in the Daydream enter the market. For Nightly Business Report, I'm Julia Borston in San Francisco.
And that is Nightly Business Report for tonight. I'm Contessa Brewer. Thank you for watching.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody, and we'll see you right back here tomorrow night.
Nightly Business Report has been funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do